Have you ever wondered if that side hustle you're running, that thing you do on the weekends for a little extra cash, is actually a business in the eyes of the tax authorities? So today, we're going to cut right through all that legal jargon and give you a clear guide on when your income-generating activity officially becomes a taxable business here in Malaysia. Right, let's get straight to it. Maybe you're doing some freelance work, you've got a little online store, or hey, maybe you just sold a piece of property and made a nice profit. Is that just a one-off gain, or is it a full-blown business? This is probably one of the most common questions people have. And you know what? Getting the answer right is absolutely crucial. So here's our game plan. We're going to start with what the law actually says. Then, I'll walk you through the exact checklist the authorities use to make their decision. We'll sort out what kind of income is in and what's out, and then we'll wrap it all up with the key principles you just have to remember. By the end of this, you'll be able to look at your own situation with a lot more confidence. All right, first things first. To really understand how the government sees this, we have to go straight to the source, and that is Malaysia's Income Tax Act of 1967. This is the rule book that everything else is based on. It all boils down to this one single sentence from Section 4A. Now, on the surface, it sounds pretty simple, right? Gains or profits from a business get taxed. But the real question, the one we're here to answer, is what exactly counts as a business? And pay close attention to this part. For whatever period of time carried on. That's a huge hint that this doesn't have to be some long-term 9-to-5 operation. So, how does the law define it? Well, it casts a really wide net. It includes the obvious stuff, like a profession, a vocation, or a trade. But this is the phrase that catches almost everything else. Any adventure or concern in the nature of trade. This is the key that explains how side hustles and even those one-off deals get looked at. And notice, it very clearly says it excludes employment. Your regular salary is a whole different ballgame, taxed under different rules. Okay, so that definition is, well, pretty broad, isn't it? So how do the authorities actually apply it in the real world? That brings us to our next section. They use a kind of checklist, a series of tests to figure out if what you're doing really is a business. The best way to think about this is like a scorecard. It's not about passing or failing just one test. Instead, the tax authorities look at everything together, the whole picture, to see if your activities, when combined, look and feel like a business. Honestly, thinking of it this way makes it a lot less scary. Let's break down the scorecard, shall we? First up, the profit motive. Was your main reason for doing this to make money? Simple as that. Second, repetition. Is this something you do over and over again, like selling your crafts online every month? Third, commerciality. Are you running it like a business? Keeping accounts, maybe doing a little advertising? And finally, we're back to that adventure test. Even if it's a one-and-done deal, like flipping a property, if your primary goal was to make a profit, it can be considered a business. So yeah, that single house flip could be a taxable business adventure. Here is a perfect, real-world example of that adventure concept. Someone goes out, buys a bunch of land, develops it into houses, and then sells them all. Even if they never do it again, that entire project, from start to finish, is a clear, profit-driven venture. And in the eyes of the law, that's a business, plain and simple. So here's the number to remember. 1. Just 1. A single transaction can be enough to be classified as a business. It's not about how long you do it for, it's about your intention and the commercial way you go about it. Okay, so we've got the tests down. Now for the really practical part. Let's get specific about what's considered business income and what isn't, because knowing how to classify your income correctly is absolutely fundamental. Let's start with the easy ones, the no-brainers. If you're selling goods, making products, providing services like consulting, or you're a professional like a doctor or a lawyer, that's all clearly business income. And yep, as we just saw, property development fits right in there too. But wait, it doesn't stop there. It's not just about the money you make from your main activity. Any related or ancillary income also gets pulled in. We're talking about things like commissions, service charges, or even money you recover from a bad debt you had already written off. It's all part of the same business pot. Now, this slide is super important for getting it all straight. On the left, you've got your business income under Section 4A. But on the right, you've got other kinds of income, your salary from a job, dividends, interest, and these are all taxed under different sections of the law. So why does this matter so much? Because the tax treatment is completely different. What you can claim as a business expense is worlds away from what you can for, say, employment income. All right, we've been deep in the details. Let's pull back for a second and just lock in the big picture principles, the main ideas that you absolutely need to take away from all this.
When it comes to how business income is taxed, there are three core concepts. First, the Malaysian source principle. Bottom line, only income that originates from Malaysia gets taxed in Malaysia. Second, the accrual basis. This means you're taxed on income when you earn it, not when the cash actually hits your bank account. And third, the basis period. Your tax is calculated based on your business's own accounting year, whatever that might be.
So let's boil this all down into one final simple checklist. If you remember anything, remember these 4 points. 1. The legal definition of business is incredibly broad. 2. Your intention is everything. What were you trying to do from the very beginning? 3. Your actions are the proof of that intention. And 4, my favorite, substance over form. It doesn't matter what you call it. If it looks like a business and acts like a business, it's going to be taxed like a business. And that brings us right back to the beginning and back to you. You've now got the official scorecard, the same one the authorities use. So take a good, hard look at where your money is coming from. How does it measure up? Thanks for sticking with me through this explainer.